Well, welcome one and all, and as you take your seats, I want to welcome you to the 2025 ABA Ausbanking Conference. This is still the place to be for all things Aussie banking. I'm still your MC, Adam Spencer. Thrilled to be here again for what promises to be a wonderful couple of days. For those who've attended before, welcome back. For those attending for the first time, you are in for an absolute treat. In fact, if that includes you, how about a quick show of hands? Who's here for their first ABA Bank? How about a round of applause for all the newbies? Welcome, 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 welcome. For those of you returning, you know the drill. The annual ABA Banking Conference spans across 2 days filled with keynotes, panels and networking opportunities focused on banking, leadership, regulatory changes, technology and industry challenges. And our theme this year is navigating disruption. I don't think it could be more fitting. For those of you who were here with us last year, what a 12 months it's been, and the D word, disruption, has been writ large. Locally, we've seen the return of the Albanese government after a crushing victory and the associated talk about serious economic reform, in particular with regards to superannuation and tax. The stock market has hit record highs, and just when we thought the good news was going to keep on coming, the RBA proved it was quite happy to play the role of pantomime villain in their own production of The Grinch that stole my 25 basis point rate cut. Internationally, strap yourselves in for the ride. To celebrate Donald Trump's self-declared crypto week, over $4 billion has flowed into various e-coffers and Bitcoin has surged to record highs. AI continues to promise, or is that over-promise, to disrupt almost every conceivable industry. Central banks' policies seem to be diverging. There's ongoing geopolitical tension from Eastern Europe to Asia via the Middle East. And of course, the question we all ask after Liberation Day, how will the inhabitants of Heard and McDonald Island afford those 10% tariffs, given that those inhabitants are, of course, penguins? These and all the big questions will be addressed for you over the next couple of days. But before we get started, as always, a little bit of housekeeping. In the unlikely event of an emergency, remain calm and follow the instructions of the well-trained staff here at the ICC. Please put all your phones to silent. We understand over the next couple of days you might need to make an important call. Just exit the room into the foyer area there as you do. But do keep your phones active. If you want to take a photo or jot down any great observations and put it out there on social media, you see our hashtag there, hashtag Ausbanking 2025, selfies, moments, quotes, related articles, insights, all that sort of stuff. Spread the news of this wonderful 2-day festival via whatever your social media of choice may be. Facebook, Instagram, LinkedIn, Tinder, we don't care. Get it out there. Hashtag Ausbanking 2025. You should have downloaded the conference app. It's on Zoho. If you haven't done that, do that now or go to the registration desk. They'll give you all the details. Here to welcome us to country, please a big round of applause for Uncle Alan Madden. All yours, boss.
Thank you. Once again, my name is Alan Madden, Gadigal Elder. For my first song, Born and bred in Redfern, the capital of Sydney. Aboriginal black Redfern, Paula Manly. Rabbitohs. Married man, 10 children, 26 grandchildren, 17 great-great. Yes, we did have TV. Just couldn't afford the bloody electricity. Welcome to country is always an honour and a pleasure. Just to give you a bit of an insight of where you are and who we are. As with all welcomes, firstly I'd like to acknowledge our First Nations and traditional owners of the lands that you may have come from or work upon, and pay my respects to all our Aboriginal elders, all elders, past and present, also pay my respects. To all our Aboriginal and Torres Strait Islander brothers and sisters, from whatever Aboriginal or island nation you may have come from, welcome to Gadigal. And to all our non-Indigenous brothers and sisters here today, a very warm and sincere welcome to you to Gadigal. No matter where you've come from, whether it be across the seas, across the state or across town, once again, a very warm and sincere welcome to you to Gadigal. And as I've mentioned many times before, was, is and always will be Aboriginal land. Only three things surer than that, coming, taxation and going. It's an honour and a pleasure to be here today to welcome one and all to Gadigal. Gadigal is one of 29 clans of the Eora Nation. The Eora Nation is bounded by nature's own, the Hawkesbury River to the north, the Nepean to the west, and Georges River to the south. And in between those three mighty rivers is the Eora Nation. And in that nation, there are 29 clans. And the clan's land we're on today is Gadigal. On behalf of members of the Metropolitan Local Aboriginal Land Council and of the Gadigal mob, once again, a very warm and sincere welcome to you to Gadigal. There's an old Aboriginal saying out there, I think it's very appropriate for you mob here today. They say, where there's a will, there's relatives. And as you travel across these traditional lands and waters, may the spirits of our ancestors guide, look over you, and keep you safe. So once again, on behalf of the Land Council and of the Gadigal mob, welcome, welcome, welcome. Thank you.
First, I wanted to take the chance to thank Anna Bligh for her outstanding leadership of the ABA and her service to the sector and the economy over the last 8 years, and warmly welcome Simon Birmingham as he prepares to step into the role of CEO at a crucial time for banking and for our economy. I'm sorry I couldn't be there with you in person today. I'm in Canberra for the first sitting week after the election, and I just got back from the G20 in South Africa. And the theme of your conference, Navigating Disruption, couldn't be more relevant to those G20 discussions and everything that's been happening in the world. We're operating in a global environment marked by deep uncertainty and rapid economic, geopolitical and technological change, where tension and volatility and uncertainty is not the exception, it's the norm, and where disruption is no longer a one-off event from time to time, it's constant. But disruption doesn't have to mean disorder. It can also be a driver of renewal and prosperity if we manage it well. That's what the Albanese government is focused on, working with you to ensure our financial system remains strong, competitive and capable of making Australians the primary beneficiaries of all this churn and change that surrounds us. Now, our goal is a banking system that's resilient, responsive and forward-looking. One that embraces innovation while protecting consumers, supports growth while maintaining trust. That vision is underpinned by the broader economic progress we've made, including bringing inflation down substantially and now sustainably. For the first time since 2021, both headline and underlying inflation are back within the Reserve Bank's target band, and that's a significant milestone. And it's created room, it's given the Reserve Bank confidence to lower interest rates twice in 5 months. And because you pass that on quickly, mortgage holders are already seeing meaningful relief. But navigating disruption requires more than just a focus on managing short-term volatility. It means building something more enduring, more resilience, more productivity in a more sustainable way. And these are our second-term priorities. Our primary focus is productivity because that's how we deliver higher living standards. Competition and banking, competition in banking, are important parts of this. Now, we asked, as you know, the Council of Financial Regulators, working with the ACCC to review Australia's small and medium-sized banking sector to understand what's working, what's not, and where we can do better. Their recommendations are now with government, and we'll have more to say on them as part of next month's Economic Reform Roundtable, if not before. That roundtable will bring together leaders from business, civil society and government and unions, seeking new ways and new ideas to lift productivity and strengthen the budget and build that long-term economic resilience. On each of these, we have a big agenda already. We've made some progress together, and the best way to work out what the next steps are is together as well. And we're bringing the same approach to our other big priorities in banking, modernising the financial system in important ways. Now, here I wanted to say a really big thank you for the way you've for the work that you've done and the work that we have done together on payments reform, on tackling surcharging, on cash distribution and acceptance, on regional banking, and also on scam prevention. Now, on payments, one of our legislative priorities is modernising the regulatory framework to capture new and emerging technologies as well as improve oversight of nationally significant payment systems. We hope to introduce this bill during the current sitting fortnight. We're also tackling surcharging. The declining use of cash and the rise of electronic payments means that more Australians are getting slugged by surcharges. We know the payment system is complex, which is why the Reserve Bank's consultation paper released last week is so important. This is all about lowering costs for consumers, but in ways that best manage the impact on small businesses and the broader economy. The RBA's preliminary view is that surcharging should be removed on debit, prepaid and credit cards, but this should be complemented with measures that reduce costs for the vast majority of small businesses. Obviously, we take the Reserve Bank's views seriously. We'll consider its recommendations along with broader industry feedback. Now, while its use is declining, cash still plays an important role in our economy. For many Australians, it's more than a payment method, it's a lifeline. The government supports Australians having continued access to cash, and we're mandating cash acceptance for essential purchases. We're also focused on making cash in transit more sustainable into the future, and I know you are as well. Last week, the Council of Financial Regulators released a consultation paper seeking feedback on a proposed regulatory framework for cash distribution. Now, I want to say we are so grateful to the ABA and the members, the banks, the sector, for your really substantial work and so much engagement with the regulators, industry and government on this really important issue, including as part of your recent agreement to extend funding to Armaguard while the longer-term work progresses. As more Australians move to online banking, we're also working together, you and I, to make sure regional communities aren't left behind. And we're grateful again for the 2.5-year moratorium on regional bank closures and new investments in Bank at Post that we're implementing together. I also wanted to acknowledge your work on scams and pay tribute here to former Assistant Treasurer Stephen Jones for all the work that he did with you on this. We've legislated the scams prevention framework, as you know, earlier this year, and we backed it with more than $180 million in funding. And already we're seeing a drop in scam losses, a strong sign that the whole of ecosystem approach is working and that the scam safe accord between the ABA and COBA is a key part of that. So we've got so much on the agenda and I'm really looking forward to progressing it with you. I'm also looking forward to working with Daniel Molino, and I know you are as well. He's well known to a number of you. You know him as an absolutely first-rate person. He brings lots of talent and energy and particularly intellectual horsepower to devising and implementing our substantial agenda in financial services and indeed right across the Treasury portfolio. Now, as you take on this year's theme of navigating disruption, I wanted to leave you with this final thought. We can't control every disruption, but we can control how we respond. And together, we can shape a financial system that's stronger because of that disruption, not in spite of it. So thanks again for the opportunity to speak today and all the best for the conference ahead of you. And no doubt I'll see you all before long.
The Honourable Dr. Jim Chalmers there, the Treasurer. Thank you so much, Treasurer. Touching on a couple of issues there, scams and payments, which are at the heart of today's agenda. We'll be diving deep on those soon. But now our first panel now for Ausbanking 2025. As the Treasurer said, navigating disruption has been on top of the international agenda. Here to share their thoughts on the banking leadership outlook, how we as an industry are navigating disruption. We'll hear from Andrew Irvine, the ABA Chair and NAB CEO, and Mel Evans, the Deputy Chair of the ABA and ING CEO, in conversation with Anna Bligh, CEO of the ABA. Please give Anna, Andrew and Mel a round of applause as they make their way to the stage.
Good morning to each and every one of you. It's my pleasure to join with both Adam and Uncle Alan Madden in welcoming you to the ABA's fourth and so far best attended annual banking conference with the theme of navigating disruption. I'm particularly delighted that the new ABA incoming CEO, the Honourable Simon Birmingham, will be joining us in the audience for most of the conference over the next couple of days. Simon will be taking up the CEO role on the 18th of August, and he'll be joining me on stage a little later in the program to share some of his early thoughts about the industry and his new role. The next 2 days will be dedicated to stimulating our very best thinking on how to keep the banking sector thriving amid some of the most turbulent waves of change that we've seen in decades. And the pace of that change continues to accelerate. The Minister for Productivity and Competition, Dr. Andrew Leigh, recently gave a speech in which he referenced an interesting fact. It took the humble telephone 75 years to reach 100 million users. The mobile phone took 16 years to reach that milestone. The internet took 7 years. Facebook took 4 years to reach 100 million users. Instagram took 3 years, and ChatGPT took just 2 months. So the pace is certainly speeding up. From quantum and generative AI to cybercrime and climate risk, shifting geopolitics and new industry players, constant disruption is now the new normal. Our challenge is to convert that disruption into momentum, to learn from each other and leave from our conference tomorrow with practical ideas for real-world deployment. With industry leaders, policymakers and regulators gathered here at the ICC today, it is a rare opportunity for some of us to break out of our own silos and help co-create solutions, the sort of solutions that disruption demands of all of us. You'll hear regulators unpack the next wave of capital and conduct priorities. Tech leaders attempt to demystify some of the work that they're doing. Major bank chiefs will be talking about how they chart strategies, particularly on the issues around productivity and growth, and much more. To set the scene, we're going to start today with a fireside chat with the chair of the Australian Banking Association, Andrew Irvine, who's also the CEO of National Australia Bank, and he'll be joined by the ABA Deputy Chair, ING CEO Mel Evans. If I can invite them both to come and join me, we'll kickstart our thinking on navigating disruption. Well, welcome to both of you. Andrew, before we get stuck into the theme of today's conference, Navigating Disruption, I thought I might recognise that you've been in the spotlight over the last week to 10 days, and you're just back from a family holiday. Are you feeling raring to go?
Well, look, last week was difficult. I'm not going to beat around the bush, especially when media is quite personal and public, so it was hard for me and for my family. I expect that there's public scrutiny in roles like this. You just hope that it's even-handed and balanced as you kind of go through it. I'm sure you experienced this as a politician in the past, and many public figures will experience media. I've just got to get through it, and I plan on doing that. I love the job that I do. It's a real privilege to run the National Australia Bank, working with terrific colleagues to help customers. And there's real noble purpose in what we do, helping people navigate their financial lives, and that gives me energy. So it's not lost on me, and I wake up every morning to try and do the best job I can and be the best leader I can be. Can I also say it's been a real privilege working with you and being the ABA chair. It's not been easy right away, like day one as CEO of a bank, to also have that additional responsibility. And I think we've done a lot together. As the treasurer said, you know, scams and frauds, cash in transit, regional and rural banking, and now surcharging. I think we've done a lot together, and I've really enjoyed working with you, Anna, and maybe I can just end this remark with a real congratulations to you on 7 years in the eight now. Wow. So well done to you.
Thank you, Andrew. It's been a mutual pleasure. We've worked on some really tough issues. We've resolved some of them. Others are left on Simon's plate to be finally fixed. But yes, it was very heartening to hear the Treasurer's understanding of some of the things we've been grappling with and will continue to deal with as customer expectations and behaviour change, particularly around payments and cash, etc. Well, some of the things that are really going to require leadership from all of the CEOs in the sector is the sort of disruption that we're all leaning into. I'd like to invite both of you, and I might start with you, Mel, having just heard from Andrew, to share some comments on how you see how the state of disruption is impacting the banking sector right now and what you think it means for Australia and Australians.
I mean, I think it's worthwhile starting with the bigger picture, which is what role banks play in the broader economy and society. Most of the people in this room today work for a universal bank, and core, at the core of many of our purposes are moving capital from some parts of the economy to another. If we think about some of the challenges that the Treasurer just mentioned around productivity, around what the future of the economy looks like, what future jobs look like, where those industries are, that will help Australia prosper. Our job is fundamentally about taking capital from some parts of society and moving it to those parts of the economy that will help Australia grow and thrive. And so I think in an age where there's increased globalisation, increased disruption, it's on all of us to really understand where those opportunities arise and go back to sometimes the fundamentals, which is what is our core purpose in terms of ensuring that we have capital available to individuals to live their lives, to businesses to grow and prosper, and therefore Australia to benefit more broadly, and to look at these as opportunities rather than threats. I think that the second angle to look at disruption from, and I know it will feature heavily on the agenda over the next couple of days, is technology. And without doubt, I wouldn't even call it disruptive. I mean, I think there's huge opportunity in the technology space. If we start with how we can help customers, how we can give them back time, how we can give them back energy so they can do the things that they want to do with their lives. In the area of data, digital processing, AI, whatever term or label you want to put on it, coming from a digital bank, it's what we obsess about, is what do these new technologies enable us to do? How do we remove friction? How can we actually help customers live their lives better, give them back time? And productivity is a big term, but if we can spend less time and energy doing non-value add things in our businesses, customers will benefit. It will allow us to lower prices, give customers better deals, put them in the right products and services. But most importantly, most of our customers actually don't want to do banking. They want us to get out of their lives, not have us insert themselves in their lives. So the way that I think about disruption and technology moving forward, and in particular at the moment, is how do we remove friction and give customers time and energy back so they can do the things that they want to do, whether that's an individual wanting to live life, a business just wanting to run their own business, so on and so forth. So they're the two angles that I look at when I think about opportunity in a world of constant disruption.
Andrew, how do you think about it?
Well, I think Mel hit a number of important points. Maybe the only point I might add is there's the geopolitical and global ecosystem and environment that the industry is operating in. And the facts are that we are moving away from the world order of free movement of people, of capital, of trade, to a much more fractured globe, where things like sovereignty and supply chain certainty and economic power are becoming more important than the free movement of people, capital, and trade. And that has implications for sovereign nations like Australia. It has implications for bank participants and the financial services industry as well. I think we are still trying to navigate what all of that means for us. And what does it mean for things like the cost of money, the cost of raising money offshore. The Australian banking industry is asset heavy and liability light. That's quite unusual. Most financial services industries are the opposite. Big reason for that is in Australia we have very substantial superannuation, which takes deposits away from the banking sector into the superannuation pension sector. And so if we have to raise money offshore at much more expensive rates because of this fractured world we now live in, that has consequences for Australians.
Interesting observations. Again to you, Andrew, in an increasingly digital banking environment, how do you see the role of physical branches evolving, particularly in terms of their value to customers and communities?
Yeah. Well, look, on this one, I think it's blatantly obvious that every bank might have a different point of view. Mel's runs a predominantly a digital bank, so I'm sure you'll have a different view than what I'm going to share.
I didn't ask her the question.
Yeah. I have quite a strong personal view that might be a little bit different maybe than my predecessor or predecessors. And that is that I think bank branches play a very important role. I come from a market in Canada that hasn't debranched in any way near the same magnitude as we've seen in Australia. And so I feel like branches are incredibly important. What is true, though, is that the nature of what happens in the branch is going to change, and that I feel strongly that branches are going to be and have become far less transactionally relevant to the lives of our customers, but they are going to be incredibly relevant from a trust, a relationship, advisory type place. They're community anchors. And so, I think it doesn't mean we're not going to keep closing some branches if they're in the wrong place. But I'd also like to see us opening branches, reframing branches, relocating branches. And so at least for my institution, I think the era of significant branch closures is over.
Okay. Mel, ING entered the Australian market with a banking model that at the time was disruptive to the status quo, an entirely digital bank without a branch network. So as CEO of a disruptor bank, how do you think about disruption in the current context?
Yeah, I mean, back in 1999, if you think about, I guess, how ING entered the market, on reflection, we were probably one of the first fintechs in Australia, though the label wasn't invented yet. We entered a market where we only offered online savings accounts that you could also access via the phone, but we also had a mortgage book. And part of the heritage of ING was we actually purchased the Mercantile Mutual license. So we were a fully fledged ADI from day one. And I think that's part of the financial success and stability of the organisation that sometimes we miss when we talk about the heritage and history of ING. We didn't actually introduce daily banking, so transactional banking, until 2009. So it was a very, very simple digital business model for almost 10 years. That obviously was in an era where only 20% of Australians had access to internet in their home. I remember starting work in 1995 and having to apply for an email address. So it was quite unique in those days, but it would not be considered disruptive today, let alone 10 years ago. I think we can all acknowledge that. And so the way that we've continued to think about how our business can keep moving forward is to go back to what we stood for in those early days, which was how do we remain different? Because at the end of the day, we're not a major bank. We are a challenger brand. Not everyone knows who we are or what we stand for. So we do have to keep ourselves, make sure that we keep ourselves and our offer quite different. We obsess about making things simple. We obsess about the design philosophy of how we get a customer from A to B in terms of what they want to do, not what the bank wants to do. And to be honest, I mean, it sort of relates back to the branch principles, is we proudly say that we don't do everything for everyone. And if we can't do something digitally and simply, and we're now, I would say, mobile first rather than digital first, we don't do it. And in fact, over the last couple of years, we've removed ourselves from some product monolines because we didn't think that we could deliver the customer an experience that deserved our logo. And so I think sometimes this is also about what you choose not to do. And we have the luxury that I know some others in the room won't have, where we don't need to be all things to all people, and we're very clear about what our business model is and how we'll go about it. But it just keeps coming back to that very simple philosophy of if you can't do it digitally and simply and offer something at a good price point and good value for money for customers, we tend not to enter that space.
Andrew, we might, given the interest, with the next term of this government in productivity and economic reform, I might just turn to the issue of the productivity challenge that Australia is facing. What is the productivity issue in Australia? What is it all about? And in your view, how can it be used as a force for positive disruption?
Yeah, I mean, it's the question of the day right now, and it should be. And maybe I'll try and unpack it a little bit for people around why it matters, because I'm not sure everybody fully understands it. And as the Treasurer said, fundamentally at its core, productivity is about living standards and ensuring that our children have a better quality of life than we do. And over the last 100 years, Australia's lived an economic miracle in that generation after generation, our children lived a better life than the parents. And today, Australia is one of the wealthiest countries in the world. And in fact, if you add property assets and superannuation assets, I think Australians per capita are the richest in the world, not well understood. And the question about productivity is this, that in the last 10 years, we haven't had any, which means in the last 10 years, ultimately, our living standards have plateaued. And so the question that we're fundamentally asking is, how do we ensure that the next 100 years look like the last? Because otherwise, without productivity, we won't have population expansion. People won't want to come here, and the Australian miracle of the last 100 years won't replicate. And so, so that's the reason we're talking about it. So then the question is, well, what's the problem, and then what do we do about it? So I think the problem, and why do we not have productivity growth in the last 10 years, I think it comes down to three very specific things. The first is that the vast amount of job growth in our country in the last 10 years has been in the public sector, not the private sector. And the public sector is much lower productivity type work. It's work that doesn't drive living standards to the same degree. A large part of that's the care economy, that's very important, but they are lower productivity work. So that's one thing, and the mix of job growth in the last 10 years to the public sector is an issue. The second issue that's hurt Australia is the cost of energy. The world needs to decarbonize, we all know that, but it's not been maybe as orderly in Australia as it should have been when you think of how much great renewable assets that we have, and frankly gas assets too, which in most of the world is considered as a transition fuel. And so the fact that energy costs have increased disproportionately here versus some other countries is impacting productive uses. And then I think the third is, and this one's probably the best understood, is housing. and the fact that we're struggling to build enough dwellings to both maintain the Australian dream of home ownership, but also to enable migration. And I think one of the signatures of the last 100 years of Australia's miracle has been migration. And migrants are actually often more productive than longer-term residents. They come here with work ethic, they want to build a better life, and they want to have a better life for their children. And so they're such a fuel for living standard growth. And so we need migration, but we can't have migration if we can't house them. And that's one of the problems. So what do we need to do? I think job one, we need to make it easier for the private sector to grow jobs. And when I speak to our business customers, they say it's so damn hard. There's regulation, payroll taxes make it hard to hire. It's just too hard to start a business, scale a business, grow a business. And we've got to fix in that, reduce the red tape so that we create more jobs in the private sector versus the public sector. We've got to look at how we can decarbonize our energy grid. It's critical. The world is warming, but we've got to do it in an orderly way, and we can't have energy prices grow unsustainably, or no one will ever produce anything in this country. And that's going to be a problem, so we've got to address that. And then we've got to fix housing. We've got to make it easier to do dwellings. We've got to make it faster. We've got to make them lower cost. We need more dwellings that are kind of medium density. And we've got to get at it, and we've got to stop talking about it, and we've got to start doing it.
In the context of the government pulling together industry, academia, government, unions, etc., into the roundtable that's coming, and I think the roundtable is probably the beginning of continued conversations on this. How do you see the role of banks and the banking industry in this national conversation? And do you see anything when you're, you are someone who has to travel internationally? Do you see from any other jurisdictions anything that you see banks doing that we could be thinking about here on these challenges?
Yeah, I think there's, and Mel, love your thoughts on this too. I think we have two primary roles. One is to advocate for our customers. And so, we launched a report on why SMEs are struggling to grow. And, it's those types of things. It's tax burdens. It's the difficulty of hiring, the difficulty of growing interstate. The payroll complexity, simply, if you're a small business that maybe has 2 or 3 locations in New South Wales and you want to open up a location in Victoria or Queensland, the amount of complexity and work is astronomical and unnecessary. So we have to advocate for our customers. I think that's primary job. And the second thing is we also need to be sources of productivity and innovation as banks. We've mentioned AI. I think getting rid of lower value work and focusing our human talent and resource on higher value work is important. So leveraging AI for good and for better customer outcomes, I think, is going to be important. There's a lot of talk overseas around stablecoin. Much more, actually, than I see here in Australia. I think that's something we need to recognize. In Australia, we talk about cash in transit, the cash economy. And it's important that we don't leave parts of our society behind. But I think the quantum of narrative that we here spend on where we're coming from is disproportionate, and we don't spend enough time as a country talking about where we're going to that I see in some other markets. That concerns me. And they're the types of things we have to push into if we're going to be a nation that leads in terms of innovation and driving wealth creation.
Mel, I might pick up on that last point of Andrew's about, and look inside your bank.
Yeah.
You're all big employers. So as CEO of a large organisation, how do you, inside your bank, go about thinking about, talking about and implementing productivity measures? And I suppose particularly, what role does AI play in that?
I mean, I think our overarching philosophy is that it all has to start and end with the customer. So being very clear about what the customer is trying to achieve in terms of their broader life or their wealth goals or whatever it might be. And sometimes that can be a very simple outcome. People want to get paid and they want to spend their money. Sometimes it can be a big life purchase. Sometimes it can be much more complex for a small business or a large corporate. So I think the first thing is to really understand what the customer wants to get out of it. In terms of productivity, I'm fundamentally with Andrew on this one. I think we always talk in terms of risks of not moving or not doing something. And the way that we're starting to think about things and have done as part of our heritage is what does that new superpower allow us to do in a way that saves the customer time, energy, money, whatever it might be. And that can be as simple as, AI for good, for want of a better term, making sure that customers know when they're in the right product or service. Large language models can do that very simple. In fact, you'd argue that it's probably not an LLM. It's much more simple than that. Right through to chatbots supporting not just customers directly, but also we can use large language models and bots to actually help our humans deliver better service to customers as well. And I think part of this is to realise that this is not about removing the human touch or the emotional part or the human part of banking. It's actually about delivering a better service and helping customers not to have to do all the heavy lifting that sometimes they need to do in incredibly complex, not simple banking system. I think the other way to think about it is if we take a step back, we are, as banks, the arteries of many parts of the economy. And so we also need to think about the multiplier effect that we can have if we can work as an industry, but also with other parts of the economy in order to deliver more efficient processes or efficient and effective and productive ways of doing things. So if we think about what we've done in the area of scams and where we're headed there, that's a really good example where if we each did that individually, the return to the nation in terms of productivity and customer benefit will still be big. But the fact that we've tackled that as an industry and we've got a cross-industry platform and framework and we're all doing things very consistently and digitally means that customers get better outcomes. So I think we've seen complaints in scams and fraud reduced by 50%, absolute cases down by 25%. And I think we should look for spaces like that as an industry where we can work with government and not wait for everything to be handed to us on a plate, but actually do things proactively where we know that there's huge benefit for customers and huge benefit for our organisations and the economy more broadly. I mean, my favourite example is digital ID. And if we think about how many hours of our lives we've spent scanning birth certificates, passports, Medicare cards, whatever it might be, we scan them, we send them on a random email to however many organisations in the economy, and we think that that's really safe. We think it's safer than a digital ID or a token. And I always use Estonia. It's a bit of a unusual example to use, but if anyone's interested in this, look up how Estonia uses their digital ID right across their economy for government services, prescriptions, voting, banking, bill payment, tax, whatever it is. These models exist elsewhere in the world, and I think it's a really good example of something that we can step into proactively without waiting for more regulation, more legislation, more guidance, whatever it might be. So that's when we look at other markets where ING exist and do business around the world, we look for little pockets of opportunity like that. And I think there are huge pockets of opportunity where banking plays a huge role and where we can help lead the charge. And, productivity is not just about saving cost and removing jobs. It's about making sure that businesses and people have better standards of living because they're not spending time on stuff that doesn't add value to their lives or their business. So that's how I think about it. You can tell I'm there on the digital ID.
And I think Estonia.
I don't carry a wallet, so.
I think Estonia's done this for more than a decade.
It has. It's been there for a long time.
Yeah.
India's another example. It's also
Yeah.
a country done amazing work with digital ID across its whole ecosystem of services.
Yep.
And I think the other thing there is we often say, oh, well, that's going to expose us to, more cyber risk or whatever. But the example that I just gave, think about how many organisations have a scanned copy of your ID right now. So having a national digital tokenised or some other encrypted way of identifying ourselves might be more safe than that.
Andrew, can we take a little bit of a deeper dive into how internally in your bank you think about, and particularly talk with your staff about and articulate the sort of productivity challenge and again, AI or other digital initiatives that might be adding internally to your bank becoming a bigger driver of a productive economy?
Happy to. So we think about it both from what I'd call a bottom-up or democratized open environment for adoption, and then kind of top-down. So what do I mean by that? From a bottom-up perspective, it's about introducing capabilities to your staff, encouraging adoption. We've got ChatGPT at now, I think, tens of thousands of licenses where our staff are using it. And obviously you have, in that case, a normal distribution of adoption. You have some people that are early adopters and love it, others who try it and really enjoy it, others maybe who need a little bit of help, and then naturally you probably have people who are fearful or resist change. And that's very normal and what you would expect in a large organization. But I think it's really important, and what we're seeing is great examples and stories of outcomes that help the bank do things better, simpler, faster, and ultimately that helps customers. And I think that's something that we're continuing to foster, a culture of trying and learning and failing and learning and trying, and I think that's really important. And then at the same time, I think there are a handful of use cases or big rocks that are going to drive real meaningful value, and the technology is there now. And a few of those for us, they're around software development. We're seeing 25% more lines of code written by the same number of software engineers because they're using robotic solutions to help write code, and they're doing quality control versus actually writing the code themselves. So they're faster and better, and we expect that to continue to increase. And that ultimately means that we'll deploy new solutions to our customers faster than we otherwise would have. So that's a great outcome. I'm driving that pretty hard, top down. Another one I think that we're going to see real outcomes is around customer service. We've introduced chat solutions with, based on large language models that are taking thousands of customer queries that used to go to a voice agent. Customers happy because they're getting an answer much faster than they otherwise would. They're not having to wait in line. And so it's tick, tick. And I think you're going to see voice-based agents coming that are driven by large language models. And so wait times will get reduced, customer service will improve, and I think that's a huge opportunity. And I think maybe the last one that I think I'll be driving is around kind of KYC, transaction monitoring, AML. They're huge opportunities for us to, and frauds and scams as well, to improve outcomes, reduce false positives, and drive better customer outcomes at the same time.
Just very quickly, we know that we're seeing an absolute explosion in the use of digital wallets. You heard the Treasurer say that he's hoping to introduce legislation that will give the RBA the ability to regulate appropriately a range of new payments systems, including digital wallets. But we're seeing at the same time a massive decline in cash. I just wonder, particularly given all the involvement you've had on this issue, what you think the future of cash is, and also what is the future of plastic cards?
I think that cash is going to be a form of payment for at least a couple of decades, but it's going to become an ever-reducing and smaller proportion of the mix of payments that you see. And so that's going to mean that the cost of cash on a variable basis is going to become more and more and more expensive. When you have fewer trucks going around, there's just less economies of scale, and that's just going to be something our society and many societies are going to have to manage. It's probably harder for a country like Australia with relatively fewer people in a relatively large geography. But I think it will be here for a long period of time. Ditto, but frankly, plastic cards. I actually personally rarely use a plastic card and use a digital wallet. It's safer. It has better biometric capabilities. So if I tap with my phone, the chances of it being used fraudulently are much, much lower than if I tapped with a plastic card. And so I think, you're going to see continued shift to more digital forms of payment away from more physical forms of payment. And that's cash and plastic. And these things are going to continue. And I talked earlier about stablecoin, I think.
So given the comment about quantum of narratives, what's the future of stablecoin?
Well, ultimately what it is it's leveraging a new technology capabilities that allow for seamless movement of money across blockchains, not just nationally, but internationally. And when you think of banking, one of the highest friction experiences for customers, both business and consumer customers, is the movement of money internationally. It tends to have high costs. SWIFT transactions are notoriously difficult and invisible or lacking in transparency. So there's huge customer utility from the blockchain technology. The issue's, I think, always been, can it be done safely? And I think that's where either both blockchains or digital currencies that are backed by central banks or potentially private stable coins, which is where the US seems to be going, could be of value. So we'll see. I think there's going to be an explosion in activity in this space, an explosion in money of movement, but there's probably also going to be some big mishaps. And so we're going to have to see how that goes, because I do fear that there could be some bad behavior and people are going to lose some money like we saw with crypto, because it's a little bit of a new frontier. But I do think the ultimate customer utility is important and valuable enough that this will drive change in global payments.
Okay, well, I'm going to wind up with a question to both of you. Considering the accelerating pace of change and disruption, Mel, what does banking look like in 5 years?
Mm-hmm. I mean, I think the boundary is limitless. I'm not alone probably in sitting here where we all get together and think about all the things that we can deliver to our customers. There are always more ideas and better ways of doing things than there are investment pools available to actually make them happen. We're seeing really significant changes in customer behaviour when it comes to the adoption of technology, and so that will be our guide. We talk about the use of cash and wallets. 60% of our customers have already ditched plastic and are just walking around with their mobile phone as their primary form of payment. Of course, we'll always offer plastic, and we are also participants in Oz Post and all of those things. But really what we're looking to do is ensure that we pick up on what processing power, data and digital and mobile functionality allow us to deliver our customers. We think that that will be about delivering banking in the context of someone's life. Potentially, we use the term hyper-personalisation, of which AI is a very significant ingredient into that. If we think about the old school bank manager, you know, that knew all of the gossip and what was going on in the local community, what a large language model now knows about me in terms of what I do in my life and where I'm spending my money and where I'm going and all the rest of it is quite significant. So we do think that banking will be more in context, more digital, and much more personalised. And I think the important thing as we move into that era is not to be scared or afraid, but at the same time, as an industry, be very aware that the one thing that we do have is trust. Australians trust banks with a significant amount of information, personal, private, so on and so forth. They trust that we will operate in their best interests and that we will protect them. And I think the work we've done in scams is a really good example of that. So while we move forward and we want to make things easier, faster, frictionless and personal, at the same time, we do need to make sure that we work together and we don't erode that trust in the industry, because our customers rely on it day in, day out, and it gives us permission to do amazing things. So we think the future of banking looks very different. I've used some examples of where we've seen banking look very different internationally. And one of the great things about working for a global bank is we get a sneak peek into that, particularly if we have operations elsewhere. So the boundary is really where we put it ourselves and where customer demand sits.
Yep. Andrew, 5 years' time?
I think Mel answered the question really eloquently. I might punctuate your final point around what isn't going to change, which is around trust. And I think trust is essential in the next 5, 10, 15 or 20 years. The fundamental proposition that customers are going to want from banks or non-banks is that, do I trust you to keep my money safe? Do I trust you to keep my information safe? And do I trust you to do right by me? And I think that's incredibly important because, you know, there are very few things that are more personal to people than their money that they've worked hard for and their information, their private information. And while there is bank bashing and all that kind of stuff, it is actually one thing that Australians trust us incredibly on, and that cannot change. That can never change.
Well, lots of food for thought there and some great notes to end on. I think you've kicked us off well. So, ladies and gentlemen, can you thank Andrew and Mel for getting us off to a great start? Thank you.